REI Property Pro tutorial for Deal Analyzer. This tutorial is going to show you how to use a deal analyzer to analyze multiple deals at once or multiple scenarios for any one deal. The deal analyzer is totally interactive with the next section of REI Property Pro's platform, where your information here will populate and flow into the next area where you would actually create your deal with financing options, exit strategies, and generating reports. Now, once you've logged into your account, you would enter on this Getting Started page. You can use one of our Quick Start tabs at the top and click on Deal Analyzer. On this page, you will have 3 scenario options to use. You can analyze any one deal or 3 separate deals. I personally like to evaluate different options for the same deal. Please notice that we do have a question mark next to each line item. You can click on any of the question marks for an explanation of that box. Okay, now let's name our deal. I've already named this particular deal I've worked on before, and it's a good idea to name your deals so if you choose to retrieve or come back and edit information later, you can go under My Resources tab here at the top, click on My Deals List, and look for your deal under that deal's name. Enter your address. We're going to estimate the repair costs, and then we're going to estimate our holding costs. In this area, you would need to consider and estimate items such as your taxes, your insurance, your utilities, lawn care, and any other expenses you may have while holding a property through the renovation process. Or many of my smaller deals, I would usually include $300 to $400 per month. So using, let's say, $350 on a 6-month buy and hold time. That's for renovation process and sale time. So we're looking at, say, $2,100. So let's put that in. Here we would enter our ARV. This is the value of the property after all of the renovations are completed. Very important number here to really gauge whether or not we have a good deal. Then we're going to enter our closing costs to buy. Enter this number as a dollar amount. And again, on some of my smaller deals, say under $150,000, I would typically use $2,500. So let's put in $2,500. And then we go down to wholesaling. Now, if you're planning to hold on to this property as a rental, there's really no need to put any information in this area here. And if you're planning to wholesale it to an end buyer, you can really just increase your price over and above what the asking price is. But if you have an end buyer that's looking at renovating a property with these particular numbers, you could look at your proposed offer and get an idea, a good idea of what to offer for that particular buyer using these potential numbers. Now at the top we have our max percentage ARV. This is a number that most hard money lenders and private lenders would use to qualify your rehab loan. In recent years, most lenders would use 65 to 70% ARV to gauge whether or not or how much they would lend on any deal. Now most lenders have increased this to 75% ARV. It gives the lender at least 25% cushion based on work completed. Also, the 75% ARV is a good number for you to gauge the property's potential, even if you're buying this property and paying cash. Now we have our closing costs to sell if you're selling this property. But if you're planning to hold this property as a rental, there's really no need to enter anything in this area. But if you're planning to sell it, then consider your closing costs as a seller. What seller concessions you would include as closing costs you would pay on behalf of the buyer, what real estate commissions you're paying, if any. I would typically use 6% in this area. But keep in mind that 6% of the ARV, your after repair value. that's going to calculate for you on your end costs. So now we see what our proposed offer is, given the numbers that we have included. It tells us, based on these numbers, what we should potentially offer for this property. Now, if we're wholesaling, we're going to add money on top of that offer or increase the initial offer price before we offer it to our end buyer. Here we will have our cap rate. The cap rate is a good cross-check to judge whether or not this property is a good rental for you. Once you've included your monthly projected income and projected expenses, then you would generate your cap rate. Most investors look for a cap rate somewhere between 8 and 10%. If you have a percentage above 10%, by most investors, this would be considered a good rental property to hold on to. Now you can judge and adjust the cap rate, of course, by adjusting your monthly expenses or your monthly income, and that number would adjust accordingly for you. Now once you have completed your analyzing scenario, please remember to save your info at the top. You can have it available for you when you return and log in again if you needed to refer back to this particular deal, make edits, generate reports, have it and share it with any of your contacts and other investors. Now, once we decided on what scenario we would like to work through, then we can click on Create a Deal. And as I mentioned previously, your information here will populate and flow into the next Create a Deal section. But here is where we can get creative. If we wanted to change some numbers on this scenario, let's say the repair cost is $25,000 instead of $30,000, we will see how our proposed offer would change. We can play with our holding costs, change that number, and see how the calculation changed for us. We can change our monthly expenses. We can adjust our monthly income, and again we will see how the cap rate makes the adjustments for us as well. And here we will see our end buyer cost. That's the total cost given this particular scenario, given these number assumptions that we have included in our analyzer. So once we're done, we'll click on Create a Deal. We'll populate this information and move to the next screen. We're actually creating a deal with our purchase assumptions, financing options, and exit strategies. We will discuss that section in another tutorial. So thank you for using REI Property Pro, and good luck on your real estate investments.